Hey, everybody, and welcome to the Double Your IRA Daily Market Update. What a day, huh? So we got that close on the NASDAQ and the S&P 500. We are right back to the record closes, and we're just getting started, right? We're maybe about 4 or 5 days into earnings season, and things are looking good. Snap, all you Snap owners out there. We own a couple of shares of Snap, and we've got some members with some Snap. About a few months back, we converted some options that were close to the money, but not quite profitable. So we converted them, and we decided to sit on them because, that was back when the Khloe Kardashian thing was going on. And guess what? Here we are. Let's go take a look at that report together. And you can see they posted a loss of 10 cents versus 12. Nice. Good job. Let's go look at a quote. Oh my goodness. That thing's up about 6%. It's been up as much as 12%. So that's a beautiful, beautiful development for all you Snap owners. Congratulations. Earnings have been mostly good. And we're not going to get into every individual earning, but it's just been a good earnings season so far. But now we're getting into really the nitty gritty, right? The banks started it off with the industrials, and it's been so far so good. The banks are actually, the financials are only about 5% off their high. So, as much as they've been beat up over the last couple of months, financials actually were a pretty good bet. Huh? But, let's talk about earnings a little bit here. We've had these financials and we've had these uh, industrial stocks. Now we're starting to get your retail, and we're starting to get your big tech. With the NASDAQ already at a record high and the S&P at a record high, I mean, we've still got a good 2 weeks worth of earnings season going. Let's see how we shake out here. We're still bullish on the market, even with this big run. We still think there's more to go. Let's talk about our laggard. We're in some leaps on Cloudera, and it got rocked on its last earnings report. We'll see if we can do a little better on this earnings report. But, we're waiting for a good double bottom here, and it looks like we're making it. So we're looking to open a second play on this. We've got some leaps going out to January on it right now, which are nice because, we avoid that volatility and stuff. But we'd like to get something a little bit short term in there because we've been really watching this stock, and we think it'll move back up to $14, $15 fairly quick. Our oil play just been dynamite. Looks like we're breaking out, moving towards that 19, and it's just a matter of time before we're at $20. Spot oil's just been rocking. You can see it's been a nice stair step up, constant higher highs, higher lows, higher highs, higher lows. Little bit of pausing here today with a little triple top, but you can see it came just right back down, bounced off that support, and resumed its upward trend. And that's just an intraday event. We like to stick with the longer charts, more semblance to them, and a little bit less. Sometimes with those short charts, you got to be careful, gang, especially you new chartists out there. With the short charts, if there's a little anomaly in the stock or something like that, maybe one big seller or maybe one just quick news or something, it can really screw your charts up. So it's always best to go with your longer charts. Our monster play, how about that? Up another 2.5% today. Look at that big green bar. Did we chart that baby right? That's where we jumped on the ride, and this is we've been just riding it since then. What can you say? We're already up about 45-50% on this play, and there's still plenty more to go. AKS is our other lagger. We've got a steel play going on, and we're still liking this, though. If you're looking for an entry, we like this area as an entry. And we're a couple months out on some $3 calls here. And we also picked up some $5 leaps. If you're looking for a steel play, take a look at it. Steel's been through a lot, and little AKS went through a lot this week too. U.S. Steel got a big downgrade. That pulled the sector with it, and AKS, of course. The Nucor had a bond that was downgraded. That took the sector down, of course. And guess what? AKS held up like a champ there. If you're looking for a nice little play, our MBRX play, right? We're up. Look at it, went as high as $3 yesterday. Rest assured, we cashed out a little more than half on this at that 300% level. And now we're going to ride the rest. But look, here's another good little stock with some really interesting potential. If you're looking for an entry, it's right back down. This is where we entered down here, where we made the call. But yeah, if you guys are looking for an entry, this is still a nice base over here. Go read about it. It's got some good things going on. They just did a $15 million direct offering, but really they probably just rinsed through. But they've got a big presentation coming up, and they've got some really good drugs in the pipeline. So this volatility is you can almost expect it. I mean, you'd like to be a little tamer than this, but you know how it goes. Our XRT play, right? We've been tracking this one. We got in this one after that one bad report that everybody called an anomaly. We're going to be patient with this. We're all the way out to the end of summer on this, and we're just right out of the money. We'll let it do its thing. We would like to see a close above yesterday's high, but retail's retail, and it's got a little bit of a catalyst behind it that should help the technical deficiencies in the sense that you've got these earnings coming out, Walmart and things like that. Your big retail. The VIX is just in the gutter. And this is what we told you from December 24th, right? So let's kind of close the show today because now we're at that all-time highs, which we told you December 24th we would get back to. And we charted it, right? And we called it. We said back there in December 24th, if you're you should not be dumping your portfolio. This is the point in time where you should be buying good stocks, good quality. We gave out a free pick, some Apple $290 calls. Guess what? If you had bought those for 32 cents a contract, they're up 144% right now. You're welcome. So, we've been calling it, we fighting the trolls on the website about how this was the end of the bull market. This was the end of the bull market. Look, gang, this is not the end of the bull market. Okay. The market's still bullish. Let's see how the rest of these earnings come out. Don't bite into the hype and don't let the trolls scare you. Okay. Play your technicals. So we're going to take this and we're going to rechart it up. We're going to reline it up and stuff because now that we're at that all-time high, it's time to make some assessments here, right? You can see it there. We've just hit that number one bar on the Fibonacci. All right, gang. So look, it's been a great day. It's been a great week. It's been a great 2-3 months. Let's pop over to CNBC and see if there's any news. Right Aid's raging its buying age to 21. That's the theme right now. All these retailers are going to start selling cigarettes for 21 to 21 older, and it makes sense. It's a smart thing to do, and everybody should support that. Hell, even the CEO from Philip Morris was on CNBC today saying he supports it. So, let's call it a day. Let's get some rest. It's a big day tomorrow. The really earnings are starting to really kick off. Congratulations, you Snap holders out there. And congratulations to all you that have been following along with our advice. So everything's been going really good. Let's see how we shake out tomorrow. Now we're going to get some big tech. And we should see see some good resolution, and we should get some good vision on the future. We'll talk soon, gang. Thank you.